Elon Musk predicts a terrifying financial crisis. Elon Musk, CEO of Tesla and SpaceX, predicted a terrifying financial crisis. It is known that this year was a turbulent year, and that the financial market did not know a single moment of rest. The tech mogul predicted the start of a global recession in 2022, which is not a very positive prediction, according to Musk. The world will witness an economic or financial crisis this year as inflation rises. Experts also predict more turbulent financial times ahead. On what basis did Musk expect the crisis to occur? Keep watching to find out. In March, the U.S. economy added nearly 500,000 jobs. The Dow Jones Industrial Average is only 6% away from its all-time high. American households have accumulated about $2.5 trillion in excess savings during the pandemic. Despite all the good news, Wall Street is abuzz with expectations of a coming recession. Billionaire investors, former Federal Reserve officials, and even investment banks have now predicted that the economy will collapse in 2023. It's a matter of historical comparison for some. In a recent Washington Post op-ed, former Treasury Secretary Lawrence Summers noted that current economic conditions are indisputably similar to previous pre-recession times in U.S. history. Elon Musk also has a pessimistic outlook for the economy in 2022. In a tweet, the tech mogul predicted the onset of a global recession. According to Musk, the world will face an economic or financial crisis this year. However, he didn't provide any additional information or justification for his decision, so we'll have to speculate. Just a few months ago, financial markets were in the midst of one of the most violent moments in history. But the mood today is different. Experts believe that the stock market disaster is likely due to rising prices and interest rates. According to Musk, macroeconomic forecasting is difficult, to say the least. I think it will happen in the spring or summer of 22, but no later than 2023. Musk made these predictions at a time when many conditions are starting to deteriorate. The Ukrainian crisis, Russian sanctions, China's coronavirus elimination policy, massive inflation, and rising U.S. Federal Reserve interest rates are expected to constrain GDP in 2022. The question is whether the global economy will contract due to deteriorating conditions and initiatives on wise politics. There's no denying that the stock market has had a rough start to the year, and many on Wall Street believe it's only going to get worse. This is not surprising given the heightened tensions caused by upcoming and ongoing geopolitical events, according to Nicholas Colas, co-founder of Datatric Research. Unexpected geopolitical developments always pose a risk to investors, although geopolitical developments are difficult to predict. There are several reasons for investors to be concerned in early 2022, following the Russian invasion of Ukraine. U.S. President Joe Biden imposed sanctions on the country. North Korea is also reportedly considering resuming long-range nuclear and missile tests. Finally, rising tensions between China and Taiwan may put global supply chains at risk. Despite a strong comeback in the final days of January, the MSCI World Index of Global Stocks has fallen more than 6% in recent months, marking the worst start to a year since 2008. This translates into a loss of $6 trillion. With investors expecting the Federal Reserve to raise interest rates quickly this year, the stock market is prepared to respond brutally if earnings growth falls short of market expectations, especially after Facebook's poor results surprised investors. After the financial crisis, U.S. technology stocks fell by about 10% in 2022. Larry Summers, an economist, former Treasury Secretary and Harvard University president, also expects a sharp recession, but did not say when that would happen. According to a poll conducted by Bloomberg Markets Live, investors and economists agree, with 15% expecting a recession in 2022, 48% in 2023, 21% in 2024, and 16% in 2025 or later. A recession is a time of widespread economic stagnation, manifested by a stock market decline, rising unemployment, and a housing market collapse. Recession differs from depression in that it is usually milder. Recessions are often blamed on government leadership, such as the president, the head of the Federal Reserve, or the entire administration. Elon Musk recently offered some investment advice to protect himself from this coming doom. This advice includes when to buy and sell stocks. Musk claimed that he is frequently questioned on how to improve one's fortunes, and his most important advice is not to panic when the market panics, Musk wrote on Twitter. First and foremost, you should only buy stocks you believe in, he says. There are some key components to the first hypothesis. Musk advised investors to buy shares in several companies. Although he did not mention the number of shares to be purchased, it's a good idea to spread your money across multiple stocks. The billionaire also shared his recommendations for buying stocks. He suggested that you put your money into companies that make products and services that you believe in while focusing on your word. On this front, Musk stuck to his words. Tesla owns the majority of its total wealth. He seems to sincerely believe in Tesla electric cars and solar panels, even if his critics disagree. Tesla's stated goal of accelerating the world's transition to sustainable energy appears to be fully supported by Musk. He is the richest man on the planet, according to Forbes' 2022 billionaires list, with a net worth of $268.2 billion, and he recently paid $44 billion for the microblogging platform Twitter. Musk also sold more than 4.4 million shares in his company, worth nearly $4 billion. He has to spend $21 billion on his behalf, meaning the money can be used to buy the microblogging site. His intention to buy Twitter makes sense. Although Musk has previously questioned many of Twitter's policies, his public statements show that he sees the platform's potential. Musk encouraged investors to sell shares only when a company's products and services deteriorate. My understanding is that he believes the best moment to sell stocks is when the original rationale for buying them changes. In other words, sell a company's stock if you no longer believe in its products and services. He says to stay calm while the market goes down. Musk's third principle aligns with his second. When the market declines, investors are advised not to panic. This is great advice. Take a look at early 2020. When the stock market crashed, many investors panicked. On the other hand, those who did not made significant profits. In short, Musk advises you to invest in companies that produce products and services you believe in. Only sell your investments if you think their products and services are getting worse, not because of mass panic or falling stock prices and a long-term focus. Run instead of instant gratification. Elon Musk also tweeted that it's usually better to own physical things like a house or shares in companies you think make decent products than keep your money in cash during periods of high inflation. Recently, inflation has begun to gradually rise. U.S. consumer prices rose 7.9% year over year, the largest increase in 40 years. Gasoline prices rose first, followed by hotels, then car rentals and furnishings. The faster money loses value, the higher the inflation rate. On the other hand, investments usually increase in value over time. That's why, during periods of high inflation, both Musk and Buffett envy investing in strong companies with stable stock prices. However, it is important to remember that stock picking is a risky business, and even if a company has performed well in the past, there is no guarantee that its stock will rise in the future. Many experts, such as Warren Buffett, recommend investing in low-cost index funds, which are less volatile but still benefit from market gains. These funds are automatically diversified because they contain every stock in the index. According to Summers, every time inflation exceeded 4% and unemployment fell below 5% during the past 75 years, the economy entered a recession within 2 years. The inflation rate in the United States is now close to 8%. However, the unemployment rate fell to just 3.6% in March. As a result, Summers now predicts the risk of a U.S. recession at 80% by next year. Investors may be concerned about how their stakes in companies will perform, but prominent investor Cathie Wood believes investors can benefit from the current situation. And she is not alone. Hedge fund manager Bill Ackman said he made a $1.25 billion profit from speculating on rising interest rates and investing money in Netflix after the streaming giant's poor quarterly results last month. Quotes, "Many of our investments have come about when other short-term investors have blown away great institutions at values that look amazingly attractive when one has a long-term view. Ackman wrote in a letter to investors. Investors are nervous because we are facing high inflation at the moment, even though this technically indicates a booming market. However, if the Fed causes an ineffective market correction, the result could be a market collapse and inevitably a financial crisis. How this will be handled remains to be seen. Do you agree with Elon Musk? Is a recession coming? Comment below.